The world's key markets are undergoing a major demographic upheaval, resulting in a new era of structural inflation. Global inflation rates have doubled in 37 of 44 advanced economies over the past 2 years.
Challenging to understand today in terms of inflation dynamics is that we got many changes and structural changes at the same time. Demographics is one of them. You got deglobalization, we have a war in Europe, an energy crisis, supply chain disruptions, you got climate change, and many other mega trends that are affecting inflation, mostly to the upside over the longer term. Many differences in economic performances stem from demographics. And demographics have been going through what some have called a great reversal, which is a huge shift from China growing the labor force globally to shrinking labor force internationally now.
One of the main factors for the rise of inflation is the aging global population.
2050 marks about the moment when the world's population is going to start to decline. And what we've now got over the next 30 years is a decline outside of Africa of those of working age population and below, the young. But that's going to be more than offset by the increase in the aged. And the fastest growing segments of population are going to be those over 70 and indeed the over 80s. And you have to think a little bit about what old people need. So pharmaceuticals for one, care homes for another, where you can't look after yourself, being cared for in what is equivalently a care home.
One consequence of an aging population is that you will have higher what we call dependency ratio. So we'll have a higher cost deal with our elderly population. Healthcare sector will contribute to higher inflation over the longer term. The labor market will have to adjust to that. Again, this raises the costs of labor relative to capital, but also the direct costs that we face in terms of an aging population.
We're going to have very tight labour markets really for quite a long time to come. We've got a tight labour market now because we've had people retiring early because of the pandemic and because of the effects of long COVID. And that could well continue. And if that's the case, then we should expect to see inflation staying high for the foreseeable future. As our climate challenges are going to bring people from the south, which is demographically going to remain young for a long time to come, we might find that actually we need these people and a little bit of a competition going on to see who can attract them the most. I think our species is immensely adaptable, and when we're faced with these challenges together, we'll make something of it.
So what does the future look like? And what are the risks?
If you get used to higher inflation, you adjust your consumption behavior, your habits accordingly. That, I think, is the biggest risk that policymakers, central banks have in mind. At Pictet, we are more optimistic. We think we can avoid a hard landing in the economy, but most likely into 2023, it will require higher interest rates for longer before we get back to more, let's say, reasonable inflation rates.